Hey, everybody, it's Ben, and I wanted to come to you. I'm bringing a special guest today, Hale Fields, CPA extraordinaire, CPA to the stars, because he's my CPA. He's also managing director for Harris CPAs, based out of here in Coeur d'Alene. Hale, I want to introduce you to everybody in my world, and thank you for this quick little brief interview we're going to do today. Tell us about you really, really quickly so they know who the heck you are.
So my name is Hale Fields. As Ben mentioned, I'm the managing director for Harris CPAs Coeur d'Alene office. Harris CPAs is an Idaho-based firm. We serve clients predominantly in Idaho, but also across the country. So I work with a lot of tax clients doing tax planning and compliance, and helping people, make smart decisions for their personal finances and for their business.
I love it. I love it. And Hale, you came back into this role, and you came into town, and I switched you a number of years ago, and it's been awesome. And so you were the first person I thought of, and I'm sure you're getting this question, but I've been getting this question relentlessly from people. That it's really on the real estate side, but it does spill over into personal finance and tax planning and stuff as well. As if Trump stays in office, if something changes there and he's going to be president, then that means likely one path for taxes and economy. And let's explore the question I've been getting a lot, and I want to get your take on it. If Biden becomes president, obviously his vision on taxes and wealth is very different. And so the question I've been getting a lot is, if Biden's elected, what does that mean? Not only in the real estate world, which we can touch on, but primarily from your aspect for all of these people watching and listening. What does that mean for their own financial wealth, their own tax planning purposes? Like what do you see coming if that is the end result? And how do we best prepare or position ourselves to navigate that?
Sure. So like you mentioned, if Trump were to stay in office, obviously we wouldn't expect any big changes going forward as far as taxes go. I think based on all the information that's out there now, the most likely scenario is that we're looking at a Biden presidency. So that's kind of what we're planning for. And the first thing I would say is we're looking at a Democratic president and a Republican-controlled Senate, most likely. So I wouldn't expect any drastic changes anytime soon. You're not going to see a complete overhaul of the tax code with the Senate and the president on opposite sides of the political spectrum. So I think that's the first thing, is for people to not get too worked up about what could possibly change, because I don't think you're going to see any huge drastic changes. Now, with that said, if you look at what Congress has spent recently, the Tax Cuts and Jobs Act looks like it costs about $1.5 trillion. There's been almost $3 trillion in COVID relief spending. And that stuff has to be paid for somehow, either through huge spending cuts or increases in taxes. So I think long-term, people should plan for increases in taxes, regardless of who is president. It's just kind of inevitable that that's going to happen.
Well, and I think to that point, and we did not discuss these details ahead of time, but Hale, I think that's one of the biggest reasons they need a professional. I need a professional. I joked with you, I didn't even know what you were going to charge me when we first started talking for a number of months, because ultimately to me, it doesn't matter what you charge me. If you're bringing enough value, it's worth every single penny. And of course you do. But that being said, what are a few, like just layups here for you? What are a few basic things that people should be looking at, rethinking, or checking in on in terms of their taxes and their financial planning, based on all the just stuff going on right now?
Sure. So what we're seeing now, some proposals from Biden, we would expect to see increases in the tax rate more on the top end. So the top tax rate increasing from 37% to 39.6%. Not a huge increase, but that would mostly impact people with taxable income over $400,000, which, we've got a big percentage of people in that tax bracket here in Coeur d'Alene. So it will impact quite a few people. But now, along with that small increase in the tax rates, there's a lot of deductions that phase out, and a lot of changes in the tax code in that $400,000 taxable income range. So not just proposals from Biden, but even under the Tax Cuts and Jobs Act, there are a lot of favorable tax changes that kind of phase out in that range. So anybody who's looking at income in that 400,000 range, now or in the future, there's a lot of tax planning opportunities to save some serious taxes in that area.
Got it. Okay. Now, in terms of real estate, and I'd love your take on this because you help a lot of people that we both know, and you deal with a lot of people who have real estate as one of their investment vehicles. Do you see anything significantly changing in that regard, in the sense of the ability for write-offs and tax advantages in financial planning through real estate versus or other traditional means?
So this is one area where there are some big proposed changes. One of the proposals from Biden is some changes to the capital gains tax rate. Right now, we're looking at 0% capital gains for a lot of taxpayers, and then rates of 15% or 20% for people with higher income. Under some of the Biden proposals, we'd see capital gains taxed at ordinary rates for people with income over $1 million. So if you're selling a $2 million house and you're looking at a pretty big capital gain, you're looking at paying 39.6% tax versus 20% tax.
That's big.
So that can have a huge impact. So one of the things we've been talking to people about is if they should pay the tax on some of those gains right now, or if they should defer them using a 1031 exchange. There's a lot of different options for how you can structure deals to either accelerate the tax or defer it to a later date. So if you're in a low income year this year and you have the opportunity to pay 0% or 15% on some of those capital gains, for some people, it makes more sense to pay the tax now than to defer it to later.
Got it. Got it. And I'm sure people that have that specific situation can contact you for more details. And before we go on, to make sure they know how to contact you. So just a few more things, because I know this is a very busy time for you as well. You're getting a lot of these questions. But for those people who we would consider the middle income folk, right? So in your world, correct me if I'm wrong, but I'm guessing that's between like I don't know, 100 and 200. What would you define that middle tier as?
Anywhere from, we have a lot of people in the $50,000 to $75,000 range, clear up to the $250,000 range, and clear throughout that spectrum. There's opportunities to plan ahead and structure things properly to save yourself money in taxes. If you have your own business, it's choosing the proper entity structure. It's making sure you're capturing all of your expenses and all the potential deductions you can take. So really a little bit of planning ahead throughout that income spectrum can make a big difference for people at tax time.
I love that, Hale. And everyone watching and listening, what I want you to know is that if you're in my world, Hale treats all of my people with the highest level of service possible. You will not be disappointed. I cannot encourage you enough to reach out to Hale to set up a one-on-one Zoom to get to know your situation, what you need to do, because the best time to prepare is before there's a big emergency or a need. So Hale, how does somebody get in touch with you?
You can email me. You can call my office. Do you want me to provide that info now, or will you?
Absolutely. Absolutely.
Yeah, so you can email me at halefields@harriscpas.com, or you can call my office at 208-772-6460.
Awesome. And if you guys make sure, please let him know that you're calling him because you watched this interview. That'll mean he'll do one of these with me in the future to give us future updates on what's changing. So Hale, thank you so much for your time. Thank you everybody for watching. Get in touch with Hale, get your taxes in order, plan ahead, and we look forward to seeing you guys in the next interview. Have a good day.
Thanks, Ben.